Good afternoon, everybody. Welcome to Paul's Monday Market Update number 160 for Monday, the 28th of October 2024. I hope you're all well. Hope you've had a good weekend, ready for a good start to what is going to be a rather eventful couple of weeks. Just before I crack on, it would be good to know those of you joining us here in the live session, if you could just confirm that you can see the slides and hear my voice and that the technology is working in our favor, that would be much appreciated. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can cover in the next 30 minutes, looking at the strength and weakness within the FX and indices markets, and also looking at some charts that are of interest and you might want to add to your watch list before looking at the live markets. It is not a signal service, it's not trade recommendations, it's just what I'm looking at, and it might be of relevance or use to you in your own trading analysis. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. For those of you who are not aware, we also now have a trading podcast. We're on to season 2, the TOGS trading podcast, and we now have our own website. You can sort of either sign up for the trading podcast there, okay, on togspod.com. There will be a video and audio session, or you can basically just use that QR code to basically take yourself there. You'll also find recordings of Paul's My Monday Market Update, and also some copies of Ian's Trader blog as well. So great opportunity for you to follow along with our trading discussions. As always, if you want a little bit more education or a little bit more insight, well, then by all means, you can join me 2 o'clock London time every Monday for active trades. I do Monday Market Matters webinars. The education element today will be on how to trade price action combinations. You can register on their website, Active Trades, or once again, take a quick shot of the QR code, and that will be able to take you there. All right, so let's dig into our own analysis. If you're new to trading or if you're new to joining us, this is the stand. These is just parts of my own work that I do at the weekend. Might look a little overwhelming or intimidating, but it's pretty easy to understand. It's really designed to give me an indication of where's the strength and where's the weakness within the financial markets, so that I'm in a position to basically allocate my time, energy, and resources accordingly for the week ahead. We are into week 44 of the year here, okay, 28th of October. Where's the strength? Where's the weakness? Well, we still have sterling, okay, still propping itself up at the top of the pile. Of course, we have the UK budget there on Wednesday afternoon, and we'll see what Rachel Reeves has to say for herself. I think it's probably fair to say that it's certainly within my own groups and my own sort of, connections, etc. It is probably the most eagerly anticipated budget for a long time. Nobody's expecting anything good out of it. Everybody's expecting it to be a pretty miserable experience. And I think it's reflective in the UK market, certainly the FTSE, in terms of how very little has happened there over the last, couple of weeks and months, basically since they took over, as people wait to see exactly how bad it's going to be. With that, as I said, sterling still remains top of the pile. Will that place still be there by the end of this week? We shall wait and see to see how markets react to that. But it shouldn't really come as any surprise that up into the second place is now the US dollar. And you can see, and we've talked about this, for every week for the last month or so, how it has just basically worked its way up the strength v weakness. Okay, as I always say, when you're at the bottom of the pile, the only way is up. When you're at the top of the pile, the only way is down, and that's what we're seeing there in dollar. And we'll be able to see that when we take a look at the dollar itself. Now, of course, this is going to be interesting as well, because we have a slew of US data, economic data coming out this week. Okay, a whole host of it, including, of course, non-farm payrolls on Friday, and then we're into, I think it's Tuesday of the following week. Then we are into the US election. So I expect it kind of swings between volatility in terms of as and when either A, data comes out, or B, Harris or Trump make brazen accusations or comments, okay, in the kind of last gasp run up to the to the election itself. But I think for the moment, I think most people are still just going to be expecting that sort of kind of dollar strength there. Where we see some weaknesses, of course, is Japanese yen, all right, has fallen its weight. A lot of that is due to well, there's a lot of things going on there, but the kind of the most important event, of course, was the election yesterday. And Mr. Shiba, well, he's vying with Liz Truss for the kind of length of premiership. He only basically took over the role from Mr. Kishida about a month or so ago. He called a very quick snap election, and that was a kind of a bold move, and it's pretty much blown up in his face. He's got a low majority. In fact, he doesn't have a majority. He's basically lower numbers, and so there will have to be some shenanigans going on to basically try and form a government. All of which I would be surprised, does not also include Shiba falling on his sword there for that. So that is having an impact on the markets. Not unsurprisingly, Japanese yen dropped this morning. You can see a little bit of the where it took us, okay, on the sort of the overnight, and invariably that's also had an impact, a positive impact on the Nikkei. Joining it down there is invariably Kiwi dollar, all right. And Canadian dollar had a little bit of a bump up, all right, but I think we'll probably see that over the session will have a little bit of a drop because we had a drop in the oil price. I think it was a 5% overnight drop. A lot of that was just due to the long anticipated Israeli strike on Iran. Okay, they went there, and I as an ex Air Force guy, I am intrigued and surprised to find that they went downtown Tehran and in manned combat aircraft. But there you go. It seems to have worked, and the fact that they stuck to allegedly military targets rather than basically disrupting Iran's economy or disrupting Iran's oil production has basically meant that those concerns have kind of dissipated. And so with that, we saw the oil price drop. And I suspect that might also have an impact on Canadian dollar, because also we have Mr. Mackham from the Bank of Canada. He's speaking later on today. It's really the only kind of major thing today. But as I said, there's quite a bit, there's a fair bit going on. All right. Fair bit going on that we can see, that's basically is been occurring. Not only do we have a kind of a bit of US economic data this week, and as I said, non-farm payrolls on Friday, which people will be intrigued to see. But then, of course, we've also got, we are really hammer and tongs into the US earnings season this week, right? Huge slew of American earnings just right in front of it, and that is having an impact on, will have an impact on the US indices, and will just add to the kind of uncertainty and volatility as they run in towards the election next week. Tuesday. Okay, so we've got, I think it's 5 of the big 7 are reporting earnings this week. Okay, we're going to look at a few of them in the charts of interest in a moment. So like Google, Meta, Microsoft, Amazon, Apple. There's fair bits going on there, etc. So as I said, there's an awful lot going on. These next 2 weeks, all right, there's an awful lot going on. It's going to make for volatile and eventful markets. And I suspect, as I said, what will happen is we'll switch between spikes in volatility and then absolute deathly quiet. Okay, as people sort of wait to sort of see what A, the data's like, and B, the kind of run up to the US election. So just to finish, the interesting thing for me is that, as I said, sterling is top of the pile. But when I look at the sterling pairs, the vast majority of them are in sell programs now. Okay, they're in selling environments. So, as I said, as I've said all along, sterling's strength at the top of the pile was more due to the weakness of others, more so than inherent strength in itself. And we'll see if there's a rug pull on sterling later this particular week. We'll look at the indices in particular at the moment, but we still see S&P and Nasdaq. They are still basically as a strategic buys, as is the DAX. Nikkei does, as is Aussie. Gold and silver, they still remain strategic buys for me as well, as does Bitcoin. Okay, and certainly gold, silver, and Bitcoin we'll look at in a moment. Okay, to get an indication of what's going on there, and it's also a reflection of the US economy story, B, the US dollar story. Okay, but interestingly, sort of Dow has pulled out of its trading environment for the moment, as has the Russell, and we'll look at that in a particular moment. So lots going on. All right, don't be surprised to find all sorts of swings, as I say, swings between volatility spikes and then swings into absolute nothing going on. All right, in between it's going to make for a couple of interesting weeks. So you make sure you manage risk and you keep your powder dry for the best opportunities. And of course, yeah, as Simon rightly says, the big news, of course, is Eric Ten Hag is sacked as well. And yes, I did enjoy that one, Simon. Thank you. I'd already offered to drive him and a few of the players back to the continent, but yeah, that's the big news of the day. Yeah, who cares about economic markets when Ten Hag is sacked? I'm sure we'll just go back into some sort of some team building nonsense as they have done for about the last 15 years. But anyway, here we are. Here we are, charts of interest. So as I always say, I don't consider myself an equity specialist, but we're all traders. Everybody likes to look at a chart. Everybody likes to sort of see what they can learn or what they could add to their watch list. This is Amazon. They're reporting later on this week. I think it's Thursday. I'm sure someone can correct me if that's wrong, but it's later on this week. This is just a weekly chart. What am I interested in? Why is it in my play? Well, what we had here, okay, earlier in the year was, we came up to the big round number of 200 and dropped away there. But the interesting thing for me is that we basically, we held that 50 period moving average, okay? We held it on the weekly and we managed to close back up above it. And now, we're also back up above the 20. All right, the 20 is also acting as a bit of support. And I'm intrigued to see, we're trading here, the pre-market 189. I'm intrigued to see, whether we will get a push and the data will push us back up towards 200, towards that big round number. Will that be a magnet that draws us back up there? Okay, will the data and everything else going on be enough to give us a bump towards that big round number? So hence why that's on my particular watch list. Then, and the next one is Alphabet. We all call it Google, or certainly all of us of a certain generation. All right. Google weekly chart. This has been, it had been in a great trend. Okay. We'd had this base here. Okay. Into the start of last year, and had been in had been in a great trend. And that's what I tell new traders. Okay. If there is a trend in place, don't fight it. Find a way to capture a piece of it. Okay. And whenever it kept reclaiming the 20 period moving average, that was opportunities. We went a bit parabolic in terms of starting to go and really a bit vertical and a bit like Amazon, a bit like a lot of them are kind of the late summer, sort of July, August, when we had shenanigans there. We fell away. But once again, this kind of previous highs, 152, 50 period moving average, we held it. All right, we held it, and now we've drifted away up. But now unlike Amazon, which we're looking at, pumping to 200, at the moment I see that boiling up. You can see the weekly 20s popping down, the weekly 50s rising, prices in between, prices getting squeezed in front of their earnings. And I would also suggest for Alphabet also into the US election as well, because they are their political alignment is quite well known. So it's coiling up, and so I'll be expecting this towards the end of this week into next week to see it maybe break out of that. Okay, and I'll be intrigued to see where that takes us. I don't really have a bias. I mean, we're still bullish, but it could go anywhere, as I said, based on the earnings and the political situation. Microsoft, okay. Microsoft on the weekly chart, once again, a little bit like these others. We had that kind of September, October last year. Okay, we had the reversal from the sort of, huge bearish flag, the huge kind of bearish channel that we were in. 200 period moving average acting as really good support. And you can see once again, like most of these tech companies, we're in a pretty good, solid trend. This is the weekly chart until we had, as I said, once again, that kind of end of July shenanigans. We fell away, but once again, big round number and the 50 that held as support there. See how it's done that? And if we look at that, and let me just clear some of this rubbish through, we can see that basically that weekly 50 has been acting as support and continues to do. Okay, so when I look at that, I would be saying that I'm much more bullish on Microsoft than I was on Alphabet that we saw there. Okay, and now I look at is the data, is the earnings, and once again the US election, is that going to be enough to basically pump us back up towards those recent highs around about 470, etc. So, once again, it's something to basically watch and shoot on this week, later on this week, as we sort of get maybe a little bit of clarity in terms of what's going on. And then Tesla, all right. Now, we cover Tesla now and then, and I've always been honest in the sense of, my own view on Musk is it really does depend upon what day you ask me. Some days I think some days I think he's an absolute, fantastic operator. Other times, I think he's a bit of a charlatan, etc. But you know, I put this chart up for a couple of reasons. One of them, well, basically just trading reasons, is you can see that after his data last week, those earnings that had a huge pump, all right, on Tesla price there. You can see for yourself. I think it gave Mr. Musk about a $26 billion bump in his own personal welfare. That's not a bad day's work, is it? Nice if you can catch it. But my interest is on the fact is that, as I said, we're running into this US election. It is my view, regardless of your political persuasions, that Mr. Musk, in terms of nailing his colours to the post with Mr. Trump, not only has he been a very strong advocate, but if Trump doesn't win next week, and depends upon, if you look at the prediction markets, they are predicting Trump wins. If you speak to the political people, they're saying Harris will win. So, it's going to make for an intriguing thing. But if the incumbent, okay, Harris, takes over, I think Mr. Musk has just put himself, he's put a big target on his back, and I will be intrigued to see, if that were to happen, how that impacts not only him personally, but also Tesla itself. Okay, he'll put as I said, put a target on his back with the government. They're not exactly renowned for being magnanimous, okay, in victory or defeat and stuff. So, we've seen this fantastic pump. I will be intrigued to see, how this plays out, okay, and whether this is, whether the share price here reflects the results of the US election. And remember, last week we talked about elements of the Trump trade, and this might be said to be another sort of proxy for that in that sense. And then finally, a maligned stock, okay, that we have covered, not for a while, but many of times, Boeing, okay. You can see for yourself, I was looking at the data there, okay. Part of it is about how they were announcing overnight that they've managed to sort of do I think it's a $19 billion raise, okay, capital raise. The reason being that basically, the share price has dropped 40% this year alone from an already low base. Also the fact that I think it's something like 30,000 workers are still out on strike and have been since September, okay, and they've turned down the price rises, hence why they've had to do a capital raise, okay, to basically keep the lights on. I also see that having screwed up the space division, the new CEO is now looking to maybe divest Boeing of its space division. Okay, they went for the diversity hire. Okay, the chap from IT and stuff, and then subsequently managed to lose $6 billion, and then subsequently managed not to be able to basically get a rocket up to take those astronauts out of the space station. I mean, that's pretty. Do you know what I mean? That's that. When you're already on the ropes and stuff as a company, not being able to rescue astronauts from space is a pretty shocking thing. And I'm sure there's all sorts of elements to it, but nonetheless, it's not a pretty picture, as well as a strike, okay, as well as problems with your aircraft. And as you can see there, we talked about it earlier in the year and how it was drifting its way down. We talked about it coming back down to kind of recent lows and stuff, which is where we have. But we're just mincing around $155 there, okay? And I think it's going to take something really good to shift that higher. And if you look at it, quite a few of the airlines and quite a few of the other aviation companies have been doing okay. But yeah, as you can see, Boeing down 40% on the year after a torrid, 4 or 5 years anyway. So yeah, you might want to watch to see how that particularly plays out over the next few weeks. Okay, so that's the end of charts of interest. All right, something just to add, something to look at. Let's switch across to the live markets now and have a look at what's been going on. So if you'll just bear with me a moment, we'll switch across and take a look at the live markets. Okay, so I hope that you can still hear me. I hope that you can see the charts now. This is just it's my sort of indices profile chart. So I have the Dow here, I have Nasdaq, I have S&P, I have Russell, I have FTSE, Nikkei, DAX, and oil. Okay, we sort of mentioned it very briefly. Oil on the daily chart. You can see we had been in a downtrend. This really nice big bearish engulfing candle here off the 200 period moving average worked our way down, and as you can see, we're kind of basically gapping down off the back of the Israeli retaliation being military-led rather than, let's say, commercial or oil-led in terms of their targeting. So kind of interested to see, is that it over with? Is that the tip for tap for the moment over? In which case will we see oil continue to drift its way lower? But let's have a look at the indexes because, as I said, we've got a lot of data coming out this week. We've got NFP at the end of the week. We've got the US elections. We've got earnings. There's all, as I said, there's all sorts going on. But if you look at Dow weekly chart has been a great trend this year. Okay, yep, scruffy at times, but it has been. It's kept going. It's kept trogging higher. That is until basically last week, and what we saw here. I mean, just look at that price action there. That's the daily chart. Okay, for last week, just literally bang, just that's what I'd call a 2B reversal, and then it's just drifted its way down, and now we're getting towards being sat on the 50. Is this a case of us, as I said, going into a period of consolidation before we get bits of data that might just shove us left, right, and centre? So, for me, I would be sort of just watching to see how does this work between the daily 20 and the daily 50. Is it coiling up? Is it going to, what's going to come out that's basically going to shift it either lower or higher over I would say over the next 10 days. If you look at the big boy S&P 500 as well, S&P 500, last week's candle, okay, we came back from, really rolling over like the Dow, but still, some people would look at that as maybe a bit of a hanging man there, okay, depending upon your views. When I look at the daily chart is still remaining above the 20 and the 50. But we can start to see that basically, where we're sort of, the 20 is holding, the daily 20 is holding, and I would need to see that hold. So long as that holds, we stay bullish. If it drops and we get back towards the 50 like the Dow does, well, that starts to be a little bit bearish for me, okay? And as I said, with what's going on over the next 2 weeks, that wouldn't really be a massive shock. Russell, all right, Russell was a little bit like Dow in the sense of, having tried to push to highs last week, it just rolled its way over, and it's not a key reversal, but it did close lower than the previous candle's high. Okay, and on the daily chart, we just look at that. That's just like the Dow, just down, sat on the daily 50, squeezing between the 20 and the 50. Okay, so as I said, this could be a week where it spikes out of it. Okay, when we get bits of data or bits of political haranguing, but equally, it could also just kind of go sideways until we start to sort of get into that pre-election jitters. Nasdaq, interestingly, it is holding up. I would look at that as holding up, right? In terms of look at the weekly chart. There is, last week is big wicks. Okay, there's support there. Okay, we see Nvidia pushing its way higher. Okay, sort of holding it up, and that's basically continued with that. And so on the daily chart, once again. A bit like the S&P 500, as in it's the 20 period, the daily 20. I'd be looking to hold as a way and a means of maintaining that kind of bullish momentum. If we look a bit closer to home, all right, FTSE weekly chart on the FTSE, it's done nothing, has it? But we know that, all right. We've been talking about that for months. Okay, everybody's basically sat on their hands until the budget on Wednesday, and then we'll get an indication of how markets react to that. It's fascinating. As I said, it's the most eagerly anticipated budget that I can remember, and also friends of mine who are business owners, traders, okay, who've done all right for themselves in the jobs, so they've retired. They're all questioning and talking about whether they stay or go. In like the great song from the Clash, should I stay now or should I go now? All right, and I think that's probably people are waiting to make up their minds based upon what they come out with on Wednesday. So, I don't expect any real kind of major difference until after we get that budget, and then we'll see for the rest of the week how that kind of particularly plays out. Because of time, we're going to just have a quick look at gold. All right, gold has been, it's running up. Last week is a little bit of a, it's a reverse pin bar, but it's still bullish close on the weekly chart. That's still a new weekly high. All right, on that, we did print this really nice bearish key reversal, bearish engulfing, and we're going a bit sideways. I think that's just the week we find ourselves in. Okay, that's the way we'll look at that. Silver. After a really strong run, last week's candle, look at that. That is, it's a bearish reversal pin bar there. Okay. If we go down to the daily, you can see it's daily tweezers. Once again, I think, holds above recent highs is bullish, but as I said, we're going into this strange couple of weeks, and everybody will be looking at that. Bitcoin, okay. We talked last week about the kind of Trump trade and about how Trump was open to basically, embracing more of cryptocurrencies, and that has kind of fueled that move higher. We've broken that kind of trend line now. I've got to expect us drift towards 70,000, big round number, act as a magnet, drift, and then as always, I'm intrigued to see, well, actually, what happens when we get there. If you look at the weekly charts there, we've only had one weekly close above 70,000. Right, everything else, whenever it's come up there on the weekly chart, it's dropped its way back. So clearly, I'm intrigued to see what happens there when we look at it going that particular way. Right, let's have a look at the. We'll have a look at dollar. We might have a quick look at yen, and then as always, we always finish on the sterling to basically have a look at what the score is. So my updates. Here we go. Dollar. This is my dollar profile. Here we go. Dollar weekly chart here. Okay, dollar index. We talked about it. 100, big round number. Okay, we just couldn't break it. Acted as support, double bottom, off we went. Week before last week, we talked about how we pushed through the 50 but couldn't get it. Last week, you saw we actually continued. We sliced through the 50 and closed well above it. But look at the daily chart. That 50 was also around the daily 200, and we got above it and continued. And we continue right. And look at that. October, has been has been dollar strength month there, hasn't it? Just look at that. I mean, why would you be fighting that? All right, why would you be fighting that, especially running into a US election? So, if that's what we're seeing from the dollar, how is it reflected elsewhere? Well, not unsurprisingly, okay. Dollar is strengthening against the Swiss franc. All right, Swiss franc. The dollar replaced the Swiss franc. It went from dollar is now number two on the stamp. Swiss franc's dropped to 3. And that is not massively dissimilar to the dollar index chart. Okay, that's the dollar Swiss franc daily chart throughout October. That has just continued to grind its way. If you look at the exact opposite of it, well, then we're looking at the euro dollar, and as you can see for yourself, last week we talked about how we had closed beneath the 50 on the euro dollar, and we continued. Okay, we've continued that. We've got bearish momentum as well. If I look at the daily chart, that is just look at that there. We're trading. We're back up here this morning, above 108, but that's kind of the number we've been pivoting around really for about the last 10 days. But you can see for yourself that has just been, the opposite dollar index, just a really lovely downtrend, euro weakness, dollar strength. That's what I'm always trying to do. That's what I'm always trying to trade. And that's added on by the what we can see here. Okay, Aussie against dollar. Aussie was strong, dollar was weak, but even though that was what the stand was telling us, we could see over the last few weeks we've just been in a one-way trend for the last month, and you can see right last week we closed back beneath the 50. If I go down to the daily chart for the Aussie dollar, it's pretty much reflective of everything else. We've just looked at dollar index, dollar Swiss franc, euro dollar, Aussie dollar. Okay, it's just a story of dollar strength, all right, and weakness from all the other majors. And as I say, the dollar's the daddy. When it decides to get on a tear, whether it be bearish or bullish, you don't want to be fighting that. You want to be finding ways to ride that. All right, so I think that gives us a good idea of what's going on with the dollar. Let's have a quick look at yen and then a quick look at sterling. These are the daily charts for yen. So, what we can see is yen weakness against the dollar against the yen, yen weakness against the pound, okay, yen weakness against the euro, okay, yen weakness against the Swiss, yen weakness against Aussie, yen weakness against Kiwi, and yen weakness against Canadian dollar. Intriguingly, what we did have is, if you look at this, how this week has started, it's basically printing, okay, reversal pin bars there. Initially, all the yen pairs weakened, but actually we can see that basically they've come back during the day. All right. Now, is that just an aberration because of the election? We will find out over the next couple of days. But as I said, as yen has weakened, the Nikkei strengthened, but that's just a reflection of the relationship between the yen and the export heavy Nikkei. All right, let's quickly finish with sterling. I appreciate we're going to run over in a couple of minutes. I apologize. As I said, I'm always just trying to share with you as much as I possibly can. Let's just let's just bring it right. We pound against yen. We've just looked at, okay, so we can see that. Let's just Bang. Let's have a little look at a couple of these. Main one, cable. All right. We had been in that great trend, that weekly trend, working our way up, and then basically big, huge evening star formation, worked our way back down to 130. But last week we closed beneath 130, but you can see we've traded up into it today. Sterling's actually had an okay morning, but you can see, I look at that as now we are kind of pivoting around 130, big round number. We're pivoting around there. And then, as I said, you've got US data this week, you've got UK budget, and then US election. There's just a lot going on, and I just think we will be in for an element of a volatile 10 days or so, ladies and gentlemen. So just be, you might be watching that and trading that, but just basically, watch it like a hawk would be my suggestions. Okay. Interestingly, what I'm also looking at, pound against Swiss franc here. Okay, pound against Swiss franc. This is the weekly chart. Look at it, how it's coiling up. All right, it's coiling up there, isn't it? Coiling up around about the kind of 112 support, 112, 112, 113 area. Those of you who join me, for years doing this, I always talk about how when price and their moving averages are all, they're all coiled up together like that. It's the calm before the storm. It's, everything is coiling up, and as you hear me say it all the time, it's like trying to push two magnetic north poles together. Okay, they just repel them, and it's the same when price and the moving averages are wrapped up. As I said, it's the calm before the storm. So let's see what that goes to tell us with that. And it might also be said the same with pound against Canadian dollar. We've had a fantastic weekly trend. We then had this big bearish key reversal engulfing candle, and really for the last couple of weeks after that, we're just coiling up and pivoting around 180. Hopefully you can see that we're just pivoting around 180. The daily chart, all right, we've got the 50 period moving averages acting as support. Okay, but as I said, I think I just see that as a little bit of coil building there. Okay, and I think it's just a reflection of the world in general, that everybody's holding their breath, waiting to see what comes out of the US, and then we'll all decide and work according to that. Just finished euro against sterling weekly chart. The weekly chart has been on its downtrend there for pretty much all year, but we still, 83 is still holding up as support. Last week was a bit of an inside bar indecision. If we go down to the weekly chart, there's kind of this is a long drawn 83.20 long drawn level of support. Okay, we're still there. Okay, we're still holding. We're going a bit sideways there, a little bit sideways. But is it a case of, are we finding a base here? Is this a base that we're going to bounce high from? Are we going to get some euro joy, or is it a base which we break through if we get if the budget isn't as bad, or if the budget is it's not too bad, or the kind of the euro data is worse. All right. So as I said, once again, I think it's coiling up, sat on that level, and we will wait and see where it takes us. Okay, there you go, ladies and gentlemen. All right, let us draw us to a close there. As I said, I appreciate that I raced through it for these 30 minutes. I'm just trying to basically, share with you as much as I possibly can in the sort of 30 or so minutes. As I said, this week is going to be a very eventful one. So make sure you're managing risk. Make sure you're keeping your powder dry for the best opportunities. All right, don't be surprised to see markets turn on a sixpence, based upon some of the sort of some of the data, B, some of the political shenanigans that will undoubtedly go on over the next week or so. For those of you on VTP, the stage 1 calls will be back tonight after the last few weeks. So they'll be back at 7 o'clock tonight, okay, as a normal stage 1. Stage 2 call will be tomorrow. And as I said, if you want to join me for the Active Trades Monday Market Matters webinar, that'll be at 2 o'clock London today. And we'll be talking about price action combinations. For the rest of you, have yourself a fabulous trading week, and I look forward to seeing you next Monday. Take care and trade well, everybody. Cheers.